Welcome to the Weekly Pivot, July 20th, 2025. This is episode 2 of the Weekly Pivot. I definitely urge you to go back and watch the first one if you missed it. It might help you kind of understand and give you some context for this week. So today, here's what we're going to discuss. We'll talk about upcoming events for the next couple weeks. We'll talk about interest rates. We had the Fed Beige book last week. We had CPI. So we can talk a little bit about what that might mean. We can look at Fed Watch probabilities for July and September. We'll review SPX seasonality. We talked about that last week. And then we'll go through some SPX charts. We'll review last week's charts and we'll talk about what happened, what we were anticipating, and what to kind of expect moving forward. So here's some upcoming key events for the next 2 weeks. This week's kind of light. I mean, it's kind of like the usual suspects, basic stuff. But kind of the highlights of the week are we've got on Tuesday, we've got Fed Chair Powell. He's going to be giving opening remarks at a banking conference in D.C., likely to be fairly lightweight. I think it's going to be all kind of the same stuff that you've been hearing him say. So I'm not expecting too much new information from that, but it'll be definitely one of the key events for the week. And then, of course, we've got a couple of big Mag 7 earnings. We've got other earnings going on as well in the background from some major companies, but the Mag 7 tend to be prominent. So we've got Google and Tesla after hours earnings. Both of those, by the way, are in a weekly squeeze. Just something to note. We've got quite a few weekly squeezes on the big guys, so I think that contributes to some of our thesis for SPX as well. Tuesday the following week, so that's kind of all we've got going on this week. For next week, we've got consumer confidence and JOLTS next Tuesday, so that's kind of not the biggest events, but definitely something that people will be watching. On Wednesday's a little bit bigger of a day. We've got GDP in the morning, and then we've got the interest rate decision as well as Powell press conference in the afternoon. And then we've got some big hitters again, earnings on the 30th of not this coming week, but the week after, Microsoft and Meta. And then Thursday, we've got PCE, which is the Fed's preferred inflation metric. CPI, obviously, we saw the data come in for CPI, but the Fed is going to base their decisions off the PCE. And then after our earnings, we've got Apple and Amazon. And that's, again, a week from this coming Thursday. And then finally, a week from this Friday the 1st of August, we have non-farm payroll. So not this week, but the following week is going to be a pretty active week into the end of the month. So let's talk a little bit about interest rates and what to expect. We saw CPI came in slightly higher than expected, and it's kind of showing that inflation rate remains sticky. We also get the Beige book, which, if you went through and did an analysis of it, you can kind of see it paints a picture of sort of a slowing economy, flat job markets and sticky inflation, which is now starting to, based on what they're seeing, starting to see some pressure from tariffs. Basically suggests that we're probably going to have rates held steady. And so looking at the Fed Watch, and here's a link here if you want to, you can use this tool. It's super handy. At least I haven't seen it be wrong. It's almost always right. Right now it's a 95.6% probability, which has gone down a little bit, but, it's a fairly high probability of no cut for July. Fairly low probability of a 25 basis. 4% is nothing. So it's likely it's not that we won't see a cut in July, which I think matches up with recent inflation data. Cautious approach by the Fed. And then September, there's sort of a 50-50 possibility right now. I think that's going to change over time as we start to see more data come in. Obviously, PC is going to have an effect on that. But that's kind of what we're looking at. Here's SPX seasonality. We talked about this last week, that it's July tends to be a pretty bullish month. So I expect that to be the case again this month. We were looking for a pullback, and we got one last week. I think pullbacks to the daily 1321 will continue to be buyable dips, and I think we're going to probably push higher into the end of the month. So here's what we're looking at last week. We're talking about our daily IHS, which we've been looking at since April. And we're looking for kind of a minimum target of 6,500. We're looking, we've seen strong trend with pullbacks to the daily 1321 zone being bought. And kind of that's what we're expecting, somewhere down to 6150, 6200 for a pullback and a buy. And we saw some near-term divergence on the daily. And so this is what happened. Again, showing the pullbacks to the D1321 held. We got a little push higher, and then we got the pullback to the D13 and D21 zone. Pullback, that was a nice dip buy, and it looks like we're starting to get some continuation. So that ended up working out pretty well. If we look at things a little more tactically, we were looking at a 4-hour daily chart with swing levels. So this is 4-hour candles, daily ribbon, swing levels on ATR levels. We saw the same divergence setting up, and we saw PO signals setting us up for a mean reversion. And of course, we got the mean reversion. We got the pullback, and it tapped the monthly pivot before bouncing back up and recovering the swing long trigger. So that's a key pivot on the continuation. That's about 62.90-ish. You can see it's kind of an SR flip here. We've got another 4-hour compression. So we've had 4 of these so far above the daily 21. And these tend to materialize into pushes higher. So, so far, of course, things can change, but, you get a little bit of consolidation and then it pushes higher. A little bit of consolidation and then it pushes higher. So expecting kind of the same thing here. And I think that could mean a couple scenarios that could happen. We could get another pullback. That's perfectly fine. I think that's a buyable dip. And then push higher. We could just continue to hold this and push higher above new all-time highs. And I think end up somewhere between 6,350 to 6,400 by the end of the month. So, SPY 632, 635, 636, somewhere around there. Seems like a reasonable push for continuation to the upside. I would look for weakness on the market only if we eventually break the daily 21 on a daily basis. Until then, this continues to look like a strong trend, albeit somewhat sideways recently, but that's normal, right? Pushes higher, sideways, pushes higher, sideways, pushes higher, sideways. And that's the weekly pivot for July 20th, 2025. I'll see you next week.